Welcome to Trading Lounge and the US indices for Monday, June 20th. So getting close to the solstice, and we're thinking about having a low on that solstice. This particular pattern here on the S&P daily chart here is looking at the pattern as wave 1 here and wave 2 here, and then wave 1 here and wave 2 here. So we're just about finishing. So I'm thinking that, well, two things. We're looking at a bigger bearish count, which we're taking in our stride as well. So we'll have another look at that today. The bullish count, though, would be a rally here that we talked about last time we spoke, and then one more move down, and then that would complete that move for that wave 2. Now, if that is a low, I mean, calling in lows is a bit of a mug's game, but once we do get those 5 waves into this space here, then all we can do is we go, well, okay, we've got 5 waves down here, we're going to get a reaction anyway, let's just monitor this here and see how it builds upon itself. And if it builds in a positive impulse way, well, then we'll just keep moving with that. As soon as we note that it is a corrective pattern, and that's through the stock market as well, the stocks that we track and other markets, well, then we'll turn bearish and we'll go down for another leg. That's not the issue. And I think that you know, when we look at the bigger bear market, if I can go to that, I think it's in here, and it's looking at a series that's the top over here. So we're looking down as wave 1 and 2 here and then wave 1 and 2 here, and then over here we'd be looking at this as wave 1 and 2 here, and then going down hard and strong here. So we can't just stick our head in the sand and say that's not going to be the case. So we will play for that. We're not that interested in this rally here. The indices haven't rallied that much, but the stocks actually have. A lot of the stock, I think the banks really were the ones to lead the rally to the upside. So if you look at JP and Bank of America, you'll see that the rally is definitely underway. So these indices are just sort of struggling with that a little bit. Anyway, the point being is that if this is the case, we will be prepared for it, and we're expecting a move down anyway, but we're expecting a move down that won't be, you know, as severe as, but you never know, severe, you know, we've got to be careful, as this will be the third wave, so the third of the third of the third, and then there'll be another couple in here. We'll go the third of the third again in here. We'll be able to nail those down. So we'll be prepared for that. And if it has a strong move, well, then we'll be on the right side at the right time, because we did everything at the right time. But coming back to the bullish picture here again. And I did on the weekend, I did started to count the whole structure up from, you know, from the beginning of any data that's, you know, the sort of 1872 or whenever it was. But I can just see there's different ways to count it. That's one of the things. But I'll keep at it. But I know that, you know, you know, anyway, we'll move along. One of the things the reason that I think the market's bullish for is because of China. Now, this is a monthly chart here. This is the compositive. So what we've got here, this is from 2009 here, and normally when markets are in, you know, big sideways triangles patterns like this, you know, they've got a slightly negative society as well that's going on. So but the point that I want to make here is that this is very clearly a corrective pattern here. Now, I don't know if that D wave is finished here and we're going into the E wave here and so on, but this D wave could obviously get bigger, but that's not my point. The point is that we've got a triangle pattern here happening in China, and this is a bullish pattern, you know, so this is going to go up and take the top of this out at some point. So if China's going to be bullish, they're not going to be selling stuff to themselves, are they? You know, they'll be selling, you know, Europe's 1/3 of their business, and I don't know what America is, but so this is a bullish pattern. So this, plus we're seeing the bond market move up now, so that's got to be a positive, doesn't it, or not? Yeah, anyway, I just thought, I just have to have a look around the block to see what's what. So, and the other point too is when the media are, really totally negative about everything, and it's the end of the world, and you've got to kind of do this and do that, well then really that's the time to buy. But obviously we're not that stupid. We have to buy based on some sort of reality, and we're using Elliott Wave, and that's our sort of reality. So I don't have the pattern to buy here yet, so it's something that we've got to continue to work through. Now I'll come back to this chart. I just wanted to have a look at some of the ETFs while we're here. So this is not much difference here really, just the A, the B for the SPY here, 1, 2, 3, 4, 5. So I believe we've got, it depends on how you count this at the top here really, but I can see that in most markets we've got a 4 and a 5 to finish off in that space. And oops, daisy, just bear with me a second. There we go. I've just got a wide screen, a gaming screen, which takes up about 3 screens on this level anyway. So that's why it just jumped so big. But consumer discretionaries here as well. I was thinking that, well, we've got a nice 5 waves here. We can look at this as 1 and 2, and then 1, 2, 3, 4, 5 for third, fourth. And so the same sort, I haven't really pulled this apart here, but the same thing would be looking at for this as well. And the industrial sector here. So slightly different count, but the A wave, the B wave, 1, 2, 1, 2, 3, 4, 5 here. Yeah, there are some overlaps there, and you can chuck stuff at me, I understand. But wave 4 and coming down for wave 5. So I haven't pulled this apart here for that either. And this brings us over to, oh, this is the healthcare sector. Sorry about that. I haven't got it labeled, but from the top here, 1, 2, 3, 4, 5, and you can see it a bit more clearly here. You can see 1 and 2 here, and there'll be 3, 4. There'll be the 4th wave here, and then the 5th wave here. So yeah, so we're going to do the 4th wave, and then the 5th wave, and this is what I was talking about in stocks today as well. Looking at all. So I don't know if this is correct, if that's going to be the low, and then we're going to make new highs from that point. But my point being is that here's a possibility that the turn could be here. It's I can see that this has come down quite fast here, so it's not acting like a C wave. So look, it may not be the case, but it's something that we need to work through. So we're going to be bearish and we're going to be short, and we'll just see how quickly this travels. I'm not trading the health sector, but we're just looking around at other markets to have a look at that. And the same for the NASDAQ as well here with this. So another move up and then another move down, and we're looking at tech stocks. Let me check this out. So that's here. I'll come back to the NASDAQ, but this is the S&P here. So we want to go in and have a look at how this ends here. And yeah, so just going to call 3, 4 here, and then we're going to go down. So I'm going an A and a B and a C to this point over here. We didn't make a new high here, and I was using that as a high. So I can put wave 1 here or wave 1 here. It doesn't really matter. It depends on how you want to count this in here. But 1 and 2 and 1 and 2 here. And then that would leave us down here for the 3rd wave, the 4th wave, and the 5th wave. And that would tie in quite nicely to have that finished off, and that's what we'll be looking for. So we're either going to come down for a low here, or we're going to come down really hard and things. So in both cases, we can trade this 5th wave down here, or it's going to be the 3rd of the 3rd, so to speak. Interestingly enough, and where, you know, when we're looking at the NASDAQ next, but this particular pattern across the top here is, as I mentioned with the stocks this morning, it's the same as Bitcoin here. So with Bitcoin here, we've got wave 4 here. We can look at this as wave 1 and 2, and 1 and 2 here, and then down for 3, 4, 5. So in this case, we're looking for a wave 4 and a wave 5 to come down in Bitcoin to finish off as well, which is important because part of the NASDAQ stocks in that, well, it's being treated like that. I mean, I don't know if that's really the truth about the whole matter, but once Wall Street gets in there and they get hold of the derivative market, well then, you know, that's the derivative market is just so much bigger than the equity markets. It's the biggest market in the world, isn't it, the derivative? So it just dwarfs everything else. So so here, yeah, we're just looking. So basically the situation is that on Friday, we got an extra low down here on Friday. We didn't get it on the NASDAQ and we didn't get it on stocks, but we got it here. So I don't know if I need to put that over here for that. No, I need to call that in the low there. Yeah, I'm not going to, you got holidays today, so it's not like a biggie, but, you know, this market will move in the off hours, so to speak. It should move up from here. I'm not that interested in it in the off hours. We'll, when it all comes back online, stocks come back online, then we'll look at it, but we'll be looking for the short trade down here. Once this rally matures a little bit, we'll have a bit of a better look at it, but we'll just leave it there for the time being. And the NASDAQ, we're also looking for the NASDAQ. NASDAQ held its low, so we can start to look at this. So we still want to push up here. Yeah, so we'll just get this to push up here, and we'll be looking for short trades down here. And then we'll see how quickly this moves. If this starts gapping down here, then we'll know that we've got the bearish count. If we start getting this on an angle here, well, then we'll know we've got that, and we'll need to tie in like Bitcoin, and we'll need to tie in Apple and all of those markets. You know, that's what we're going to do. So just to repeat, I don't know if this is going to be the low, but we're going to be looking at it so we can do it as an exercise. Okay, so we'll call it an exercise, and we'll see how we go with that move there. But today, and you obviously in holiday, so we need to allow all that to pass, and we need to allow this move up here, which before when we spoke I had as an A wave and a B wave, but now we've got it as wave 4. We'll just allow that to mature, just come back to this wave 4 here, and then we'll move down, and we'll see how the speed of this that moves down. Currently we can and look to short under here, but obviously we want to be up here, and hopefully it can get above the 11,500, and then we can look to short it over here for that as well. We need the right setup for that, so we need to build into that side there. But anyway, that's the story for that. I don't need to go into more of an intraday case for that. Now the Russell here. So with the Russell, we're looking at it in a bearish picture, but also too, I was thinking that from the top here in the Russell, this is the, what's the name, the ETF here, from the top here, wave A, and then if I bring this over here, just because there's normally some sort of equality between wave A and wave C, that brings us down here in that case. It does mean though, however, that I need to squash this wave 4 up in here as 1 and 2 and 3 and 4 and 5. Now I can see the look on your face at the moment with your eyes rolling around in your head, but let's just see how this plays out before we get into anything. So on the futures here for the Russell has made a nice effort in this rally here. You still might be long in this. We had long trades in here, and the stop we kept under here, so you may have survived this move here, I don't know. But anyway, it doesn't matter. This move here, we're still expecting it to move to the upside here, and can move up to the wave 4 of 1 lesser degree up here, so just be mindful of that. There can be some equality between wave A and wave C, or we can move up. We'll just see how it travels, and yeah, but nothing to, you know, you can poke around on, continue to poke around on the long. If you're still long here, then just bring the stop up under here. So I mean, this is corrective in here, so we'll be going up. So yeah, I'm not really worried about any of this, not going to bother with any of this in here really. We want to look for the short side. That will be where our focus is, and we'll see how quickly this particular move comes down here. If it comes down hard and fast, then we'll know that we need to stay with it. If not, well then on more of an angle, then we'll take a look at that, and we need to line all the stocks up, and we'll just keep, as I mentioned before, we were looking for the solstice low, and we need to gel all the markets kind of together into that low to see how they sort of fit. And when they do get that low, that 5 waves coming down from 4 to 5, then you know, we'll see what angle it's on, and then we'll start working a case to the upside, which may be true or not true. And as soon as we see, you know, if we get our 5 waves coming down here somewhere, let's just animate them somewhat. Once we've got these, I don't know, they're a bit dodgy, 4 and 5. There we go. So once we start this move up here, I mean, if it's going to be bearish, we're just going to get 3 waves over here, and then it's going to come down again here. So it's going to be very easy to short it over here. But if these lows stays in place and we start getting, you know, further impulse waves up here, and we start getting support, say, on this level here, because we'll need to work out, you know, where the 50-60% retracement level is, you know, from this 5 waves down here. Obviously, it'll be further down, but yeah, we'll be able to use big numbers like the 1650 here. I mean, a bit of an unusual number, but it's a medium level, and we'll be able to, you know, build a long case for these, you know, for these markets. So we'll just see how it plays out, and yeah, anyway, just to let you know that we'll be working it on that side. That's just Morgan. So alrighty, I'll leave it at that. Thanks for tuning in. Cheers.